I'm very fanatic about corridors. People talk about this city is great and that city is great. I don't think that's right. I think what really happens is at times in the US, certain corridors, which are always along freeways, become powerful. And of course, there's some cities in there. So 3 years ago, when somebody I know named Bruce Norris started talking about Florida, I published, and this was in 2017, you can Google it, an article called The Corridor of Opportunity, right? Or Neal Bawa's Corridor of Opportunity. And it defined a space that was 144 miles. And it started from above Orlando, so northeast of Orlando, running through Orlando along 4, going through Lakeland, hitting Tampa, turning south, heading down towards, Bradenton and a little bit further.
Okay.
And then a year later, I updated it to extend the corridor further from Bradenton through Sarasota, now ending in Cape Coral and Fort Myers. And then the final iteration of that corridor was I started calling it a web, because it started to spread beyond the freeway to the villages and to other places. Like it basically started going north of Freeway 4 and south of Freeway 4 and became a web, right? And then we found a second corridor. It was in Utah from Logan to Springville, passing through Salt Lake City. And now my favorite corridor today is 59 miles between Austin and San Antonio, passing through New Braunfels and San Marcos. So we would start writing about this like geeky stuff. And we gathered this community of geeks. They're like, this is really great. And some other people are like, this is the most boring shit ever. Well, I think a lot of times it's compression. So if you look at, I say Lakeland might be a better opportunity than Orlando and Tampa because of compression. So the corridor is usually defined by 2 anchor cities, right? So in this case, it's Orlando in the east and it's Tampa in the west. And then the corridor then starts to extend. So from Orlando, it's now expanding up north toward Jacksonville, not quite all the way, but maybe another 40 or 50 miles. And then from Tampa, it's extending downwards towards Cape Coral and Sarasota. What I find is there's usually one city, 2 cities that are compressing. So San Antonio is only about 60 miles from Austin. And what I'd learned was the San Francisco Bay Area sort of became this compression area, and entire sections of freeway became cities. Like cities just got plopped in, right? So Concord used to be a city and Fremont used to be a city. And then in between, there wasn't much. And then cities like Dublin appeared. Cities like Danville sort of appeared over the last 20, 25 years. So we realized that when you've got 2 anchor cities, the area in between gets filled in, and that area is much more profitable, right? Than the cities themselves. So, and then there's the secondary concept. Sometimes you don't get 2 cities in a corridor. Sometimes it's a primary that is becoming so powerful and creating so much profit for real estate that it drives its growth down in the direction of some freeway. So here's some examples, right? So Denver is really driving the growth of Fort Collins and Colorado Springs, right? It's the driver. The San Francisco Bay Area is responsible for Sacramento's growth. Tacoma benefits from Seattle. Olympia benefits from Tacoma. So what we started realizing is that what was happening is a city was actually driving the growth of all the other cities around it, and the bigger opportunity was always in the smaller cities. It wasn't in the large ones. Because by the time you heard about the large ones, 50 million other people had too. So you were usually late. So it made sense to figure out, where's the growth now flowing? Like today, I don't feel like the right place to go to is Phoenix. I think it's Tucson, because so much money has been made in Phoenix in the last 4 or 5 years that those people are like, I bought something for 100,000, sold it for 200,000, bought it for 200,000, sold it for 400,000. I don't think it's going to double again. Where should I take my money and go? I live in Phoenix. Well, the answer is I should go to Tucson and buy it for 200,000. Hopefully it'll become 400,000 again, right? So I think that if you use data to figure out these compression cities, you start seeing patterns that are really amazing, and you can get really crazy returns, absolutely nuts sort of returns. That growth worldwide is slowing because of our ridiculously bad use of real estate. Ridiculously bad. We've crammed 50% of the world's population into 2% of the land mass. We say that we don't have space, which is nonsensical. Ever see a map of the US at night from space? Only about 3% of it is lit. Clearly, we have all the land in the world. But the problem was the jobs. The problem was the jobs were concentrated, especially the well-paying jobs were concentrated in certain areas. And so you had basically this 1 hour freeway radius around that. And that was the bubble of the US. That's ridiculously, crazily inefficient, right? And nobody's really addressed that. Just so you know, e-commerce is up 77% compared to last year. Usually grows about 10% a year. So we got 7 years of e-commerce growth in the last four months. 7 years, right? Just absolutely astonishing, absolutely mind-blowing. So right there, by the way, if you understand what are all the things that need e-commerce and what does e-commerce need, like logistics, warehousing, right? So you just in 4 months got 77% of growth. Well, we didn't create new warehouses. We didn't create new logistics. So guess what's going to happen? In the next 5 years, you're going to have a supply-demand crunch because retail meltdown, that money is going somewhere. So, well, it has to go to warehousing because warehousing is 1/3 the price per square foot. And that's what people need today, right? Warehousing to deal with this explosion in e-commerce. Now, in the same way, you apply that comment that we've been talking about people leaving the San Francisco Bay Area. You know, Bruce has been talking about people are leaving and going to Florida. Yes, but how many? Hundreds of thousands. Yes, but what I believe is about to happen is that hundreds of thousands is now going to become millions. And when it becomes millions, it actually changes real estate. It changes the way that we've been doing real estate in this country. Today, what this means is that I am not as worried about secondary markets in the US crashing and burning because job diversification is now a reality, and it's actually going to accelerate in the next 5 years. And if job diversity accelerates, then the smaller cities don't get hurt as much in the next recession as they would have in the past. So this is a paradigm shift, right? I do not believe that this thing where a recession happens and jobs come back to the center is going to happen in this recession or the next one. We actually haven't seen job losses in some of these smaller cities in the last 4 months. And you might not even have to do that. I think people are doing it anyway. So there's videos, watch them on the internet. New York has an 85% growth in apartment inventory in the last 4 months. 85% jump in inventory. That's catastrophic. The rents, they're now, the average apartment owner is offering 2 months free. That's the norm, right? So that market is going to suffer because there's a huge number of people that are like all of a sudden free to leave. And yes, we know that 7 out of 10 of these people will come back. Maybe it's 8 out of 10. But you know that 2 out of 10 for such a large number is also an extraordinary number, and that creates a massive amount of change. It basically pivots the situation towards smaller cities, and I think that's a multi-decade pivot. Usually what happens is if you do those 5 metrics right, and there's a bunch of cities that do really well on those metrics, you know, Salt Lake City, for example, Provo, Utah does really well, Orlando does really well, or at least it did until about 4 months ago. But when you see those metrics, people think culture is created first, and then because culture is created, the jobs come. That is a very popular myth. I think it's nonsense. What I've found is jobs are created, and that creates culture. So you look at Austin, Michael Dell built, you know, started Dell there in 1994, and that built, you know, Austin's story. And then 5 or 10 years after that, they started doing that big show, South by Southwest,
yeah.
right? And that show started to build Austin's culture. But that happened 10 years after the jobs came in. Now, if you take that example and apply it to a bunch of other cities, you'll start to see that their culture develops as they go. Silicon Slopes, I mean, the astonishing culture that Utah and Provo have was not there. I mean, a lot of this culture wasn't there 10 years ago. And a lot of the jobs moved because Adobe started to move jobs from the San Francisco Bay Area to Silicon Slopes because they realized that their universities are phenomenal and they're, you know, 1/5 of the cost of our universities here. And so one company, I think Novell started that move, and then it was followed by Adobe, and now basically just everybody, right? So Facebook, Amazon, and Google all opened billion-dollar locations there in the last 6 months. So I think it is not culture that makes a great city. It's these fundamentals that make a great city, and then the culture grows. It automatically grows. And some cities do it better and some don't do it as well. And I think, like, for example, Austin now has developed a really cool culture, and so is Tucson. Tucson has a very artsy scene. Austin is the cheapest city in California. And they look at me for a second, and then they're like, oh yeah, right? It's like, yeah, they think of it, I mean, because they're like, no, it's the most expensive city in Texas. Like, no, it's not in Texas, it's in California, it's really cheap, right? And you look at it that way, and people are like, people get it. It's like, so Austin has room to grow. Yes, it has decades to grow.